Welcome to another episode of That Crazy Triangle Guy. Here we are on the Bitcoin index chart, 5 minute chart, currently at 27,159 here. Uh, Tomorrow we want to be up to this white line over here. And I'll tell you why in a second. But we do not want to go up there before Bitcoin futures opens. Otherwise, we will leave a gap. Now, I don't really care if we leave a gap. We don't want to be above this level when futures opens tomorrow. Um, like I said, I don't care if we leave a gap, but the only reason I care is I don't want to hear other people talking about it for months on end, how we have to come back down and fill it. So let's go now to the 4 hour chart and just review what has happened since the FTX collapse. So we've been trading in this parallel triangle, this purple parallel triangle. Or I'm sorry, I am the triangle guy. It's a parallel channel, and we consolidated and then pumped and consolidated into a triangle and pumped, but not before having a little dumpiness there. And then we consolidated again inside this yellow triangle, looking for a pump here to our next leg up around 35,000, 34, 35,000. And zoom here. I honestly thought that's what we were going to do here. We were in a symmetrical triangle, and I thought we would break out here, uh, visiting this top into an ascending, creating an ascending triangle, and then busting out here. But I guess we didn't like the FOMC meeting or the CPI numbers, whatever. And see this red arrow here? We made this measured move from the base of our symmetric triangle down to this orange line, which has been a major line of resistance for how long? Since January, mid-January. It's been a lot of support and some resistance and a lot of support in many areas here. Um, Now, why did we make just this move right here and not a larger move like from the top of the symmetric triangle here down to at least this portion? Um, that would have taken us down here a little bit further, something like this. And a lot of times you'll see that in these large triangles, we don't necessarily make that big move, which was the first leg creating the triangle. A lot of times we'll make a move closer to where we bust out, the measured distance of a leg closer to where we bust out from the triangle. And that's what we did. And as you can see, let me take this off of auto so I can control it a little better. Then we started trading in this other symmetrical triangle. And but we've really been consolidating, and when that happens, when the market just wants to sit here, a lot of times we will bust through these triangles. We'll come to the end of the triangle and have nowhere to go, and we'll do a little fake out to the top and a fake out to the bottom, creating a bigger triangle, just extending it. And that's what we did here. And actually, in fact, we did a fake out to the bottom, a fake out to the top. Um, but we're not quite trading in a triangle that takes that action into account. We've come back down and continued consolidating in this orange symmetrical triangle here, um, as I thought we would back here. I didn't really anticipate. Well, I did, not to this extent. Um, and I thought a move like that, of course, would. This was a pretty big move out of this triangle. And, but I guess everybody got faked out both ways. But of note is that this move created um, a lot of price action within this parallel channel right here, very clearly. And that's important later on. Now, what else we have done since we made this pump from this dump and this pump, we've also been consolidating in this parallel bull flag for a long time. This is like March, April, May, going into June, 2.5 months of consolidation in this parallel channel. Now, this is very interesting because we have a head and shoulders pattern here. There's the shoulder, there's the head, there's the shoulder, and which a lot of people have pointed out. This red line here is the neckline of that. Now, what that did was reverse us into this parallel channel, but now we have an inverse head and we've failed to really break through this neckline successfully, because that would take us down, and I no longer have my arrow here. That would take us down somewhere, I think down here around 24,000 or so. Wait, yeah, roughly around there. Um, and you can see we haven't done that. We almost broke, caused a failure of the head and shoulders pattern here, and I thought that's what we were going to do and pump from there, and that would have taken us way up back up to the top of our purple channel here. But we did not do that. We got faked out to both sides there. Good job, everyone. But what we have done is created an inverse head and shoulders pattern with this shoulder here, this head here, and we are currently forming the final shoulder. And that's where we come up to the white line here, which is our neckline as well for our inverse head and shoulders pattern. And of note, we have a double bottom here in our head portion of the head and shoulders. Now the measured move from that would be this purple arrow from roughly the top of the head to the neckline, measured from the breakout of the neckline up to here. And note that that takes us back into this parallel channel we were forming on this fake out pattern. Go figure. Interestingly enough, too, it also takes us about the same level, a little bit higher than our high here, our local high of about 31,000. Now, what else? Well, let's take a look at what to expect in the near future here. So we know we want to come up here to this white line. Where can price action trade in order to maintain our bullish narrative? This green line here, let me go to the daily chart now. That's the daily, and my Gaussian channel's turned off. There's our Gaussian channel. Now I've drawn these green lines to estimate where our Gaussian channel may be headed, anticipating that we break out here and continue upwards. But currently, the Gaussian channel has turned red. And that's very scary. But watch the previous video, and I'll explain why that is really, really good. And in practically all previous times that we've seen this move in the beginning of our bull run, it has led to breakouts pretty quickly through the top of this channel. I mean, the top of the Gaussian channel, and that's another reason why it makes sense that we're heading up this way. But for now, in the immediate future, we are safe trading in this anywhere in this area. I'd like to see us stay above the top of the Gaussian channel. It's okay if we wick through, but we've already done that. And here we tested it. We wicked through a little bit, but it's time to move on from there. So, but we can trade in this area. I think we're headed this way. Also of note is that typically we do head upwards into the CPI, PPI, FOMC meetings in the week or so before, with the exception of the May meeting. That's happened every single in the recent months prior to May. That has been the case, and I anticipate that's what is going to happen here. Now, the other thing is the weekly Gaussian channel. We've gone over that. Let me go to the weekly chart. I've drawn these red lines to estimate where the mean band of the Gaussian channel is continuing in the top of the Gaussian channel on the weekly time frame. Now, we're playing out the worst case scenario as I outlined about over a month ago, and you can go look at that video if you want to. Typically what happens, let me put this on auto, in prior coming up from prior bottoms, is that once we enter the Gaussian channel in the weekly time frame, we quickly move through it. Well, these candles are weeks, so we move through it. We blast out the top of it, come back down and retest it, usually before it turns green, before it turns upwards. That's what we did in 2015-16, and that's what we did here. And you can see we did retest it immediately. Now this move was too quick, and I showed here why that was. Price action rose at a much faster rate than accumulation did, as you can see by the slopes here. The slope here and this steeper slope here. In 2015, this steep accumulation slope pulled us out of the bull market steadily, or bear market steadily, and we have a much steeper slope occurring now, and that should pull us out a little bit more than in the past, and a little bit more than what we're doing now. So back to wherever I was on the weekly. So here we are in the weekly Gaussian channel. Also in the past, not there, but here in 2015-16, you can see that we stayed about a month or so inside between the mean band and the top of the Gaussian channel, uh, testing that area. And we certainly have done that testing here, but have maintained inside that area without breaching either. The next move is up and out, and then back down for a retest, which I feel is important. Question is, when is that retest going to happen? We believe it should happen before we start curving back upwards. I believe that it should also happen above 28.8, which is a major level of support and resistance. So, we may do it out here and just not come all the way down to the top of the channel, or perhaps the channel curves upward more than what I have drawn here. But I really feel that we should do it here. We should do it here in the month of June. Question is, how is that going to play out? Because usually when we bust through the top of the channel, it's a big, big move. It's been, I believe, 30 to 80% move out of the top of that channel. I don't expect 80%, but certainly maybe 25, 30% or so move through the channel, out from the top of the channel. It's late. I gotta get to bed. And that's another thing. If you have trouble sleeping, you definitely want to listen to my channel, because I've been told that by a lot of people that they watched my video, that they didn't watch the whole video because they ended up falling asleep. So if you ever have trouble sleeping, tune me in. Okay, so where are we? We're about to bust out here, heading into the CPI FOMC meeting, the Hinman document release, document release, whole bunch of stuff coming up in just, today's the 4th, in just 10 days, 9 or 10. Well, yeah. Just over a week, you guys. So I expect these moves coming soon. Now, the other thing I wanted to point out, do I want to do it here on the weekly, or I think the 4-hour chart shows it the best. Let's zoom out here. Remember our parallel bull flag channel we're trading in. Here's the pull from this dump here to just the bottom of the channel. Then take that pull, put it over here to the top, and that's around, pull this down, I believe $40,000. Yeah, $40,800. Now, see that white X I made? That also brings us to the top of our purple channel and into this column that we created back here with the fake out to the bottom, fake out to the top. And also the channel that we should initially bust through here to. And this white X is the end of June, June 28th. Now, let's see what kind of a move that is. From where we're at now to there is a 50% move in 3 weeks. That seems pretty extreme, but it's what the chart is saying. And but I don't know how we're going to do that. I don't know what kind of news, what kind of narrative is going to come out in the next 3 weeks that's going to get us there. Maybe the XRP case gets settled. Maybe these numbers that are coming out in just over a week are going to be freaking awesome. Maybe China's going to start, Hong Kong's going to start buying everything. Now, also to note, let's measure to this purple arrow, which would be our initial breakout um, above the top of the Gaussian channel. That's 16% from where we're at now. Let's see what kind of a move it is from the top of the channel. From the top of the channel to the top of the... That's only an 8% move. It's a very, very, very conservative. And I have to believe that maybe that's what we see in the next week leading up to the FOMC meeting and all that jazz. We see a breakout from the top of the channel, just 8%, and then come back down and retest this $28,800 level. And we trade in this area for the next couple weeks. And after the FOMC meeting and all that stuff is when we see a big move back up to the top of our purple channel. Let me point out one more thing while we're here, because I just remembered why, another reason why, if we are to retest the top of the Gaussian channel on the weekly time frame, this red line, we want to do it here in June. And that's because of the daily Gaussian channel, which I've estimated here in the green. We don't want to fall back in there. It's okay to fall back in there as the bull run progresses, and we will several times probably, but not here. When we fall back into the daily Gaussian channel, more often than not, we tend to fall all the way through, at least to the bottom of it. Sometimes we do, especially if we've just broken out of it. Sometimes we do just trade at the top here or just barely coming into it and then pulling back out. But that's very rare. Usually we come down into the channel, and a lot of times through the other side. Now, of course, for those that are looking for 25.3, that would get you there, probably. But, this is a worst case scenario, and unlike the other worst case scenario that I outlined here, I don't think we're going to have a double worst case scenario thing going on here. Now, the another factor that is telling me more likely than not the move up here in the month of June, it more likely to happen than not. Boy, am I being redundant here. Is the other markets in the month of May? The other markets. This is the S&P have gone up, have made some nice gains here. That's the S&P. Nasdaq is a lot better, as you all know, I'm sure. Look at that, the Nasdaq, and even the Dow. Well, the Dow has gone down, but it's still even recovered. And Bitcoin is lagging severely behind these other markets, and we're due for a big move upwards to catch up. Um, so what am I forgetting here? I think that's about it. I think that's about it. So let's go to maybe the 4 hour. This is what I'm seeing. Where are we at now? 27,135. So we're just staying around here. But tomorrow I see us coming up here, maybe trading around between the red and the white lines a little bit. But we got it. We got to bust through here. Time to bust through. Time to bust a move and get out of this freaking boring sideways action we've been doing. It's time for us to move. And this is the way. Right here, back down here, and then bust a move up here. Oh, I know what I wanted to show you. The other thing. Let's go to the weekly. Maybe here we are on the weekly. Areas of significance here is 38,711, which I as a area I had estimated a while back because it's a pretty significant area of support and resistance here that we've had. The $40,000, $41,000 area also. You know what? And if you go to a daily, I don't want to go to a daily because it's just so busy, but you can see a lot more support and resistance candles on the daily. But there you can see a lot at 40,800, 900 or so. Um, and of note, let's see what we've done in the past as we've come out of the bear market. The first move was to here, to the bottom, these wicks here. Now we've done that. Um, the next weekly candle closed here at other levels of support and resistance here. The next candle closed here at other key levels of support and resistance back here. And the next candle, the same. Kept hitting key levels of support and resistance all the way up here to this level. How far did the wicks go? Let me get rid of these. So those wicks came all the way up here. So our first move out of the bear took us pretty close to our all-time high. That was just this last time around. And I think that's where we're going to be headed here too. I see us coming up to